I decided to put some of my money in a whole life policy because I like how it's out of the banking system, which is safer in the case of banks or economies collapsing, as well as protections against bankruptcy or collections. However, I'm concerned about how my company, MassMutual's biggest assets are bonds. As far as I understand, interest rates are really low, and if they go higher, which they most likely will, I know bond values decrease, which sucks because I'm entering adulthood at the time of most likely high interest rates, but it is what it is. Are there other ways whole life insurance companies combat or offset potential losses like these to reduce loss of profit?
Yeah, she makes a good point here, because when you have a bond, let's say that a bond is essentially a debt instrument where you've lent money to the government or to a corporation, and they give you an interest rate on that. Now, if you were to sell that at a time where interest rates go up, well, you'd have to sell it at a lower price because someone can go get a new bond with a higher interest rate. And that's what she's talking about. It's called capital depreciation, essentially.
Okay.
A lot of the insurance companies, you have to look at their portfolio. Are they trading the bonds very often? Or do they have longer term bonds because they have large sums of money? It's when you're in a bond fund that is especially concerning. A bond fund is like a mutual fund where you have a lot of different bonds, and they're trading them on a regular basis. As they trade those, well, you could have to trade and, sell it at a loss. But this is a strategy a lot of people use. Is called a bond ladder. So a bond ladder says, we're going to have some really short-term bonds, some medium term and long term. So long term, you're going, okay, we're going to have these for over 10 years. Short term might be, you might even be using treasury or T-bills or T-notes. And they're going to be really short term, not going to pay a whole lot of interest. And medium term bonds, you're still, because you're lending the money for a shorter period of time, you might not be getting as high of an interest rate. So that's one of the ways that they kind of combat the fluctuating interest rates, is with these kind of bond ladder structures. Okay. And one of the things that happen with some of these major insurance companies is they got to buy longer term bonds that were non-callable. Non-callable means that even when interest rates change, a lot of bonds that people have, the company can go, we're going to buy that bond back because we can get that money cheaper now, right? So those non-callable bonds are really helpful. But they're also, when you borrow from your policy, you're actually paying an interest rate to the insurance company for using their money. That's one way that they help with their portfolio. MassMutual bought a boatload of Bitcoin, actually.
Oh, really?
Yeah, they were one of the early ones in that industry that bought some Bitcoin. So, and they also do collateralized debt obligations, which there's definitely some potential risk with those, right? So it's basically, there used to be like mortgage-backed securities. You probably heard about those, because those in 2008.
Yeah. You
saw like people were, like these companies were lending money and they were buying paper or buying these portfolios of loans. And a lot of those loans got defaulted on. So yes, these different things have risk, but there are more restrictions and requirements on insurance companies. And there's also people that pay for term insurance, which only pay out 1.1% of the time. And that fuels some of the dividends as well. So they've got pretty substantial reserves. They're doing bond ladders, not just bond funds, because they're buying them individually versus as a fund that's being traded. Do they face some risks? Definitely. But also, I find like a company like MassMutual that's been through, the world wars, through the Great Depression. I mean, they've been around for 150 years or more.
Good track record.
And they're investing in a fairly conservative way. So it's something to be aware of, and it's to understand these collateralized debt obligations and different things like that. Like, what are the potential defaults that could happen there, and what percentage of the portfolio is in that? But I have some MassMutual policies, and I'm not concerned right now.
Okay. So as a policy holder of a whole life insurance policy, how can you go about, learning about what your company, in this case it's MassMutual, is investing in? Like, you get annual reports, you can look things up, you can ask your agent. Are they pretty transparent about
it's not like you know exactly what's being held, but you know the percentages of what's being held and what types of assets are being held as an overall, and they'll give you a pie chart and kind of show that sliver. So
okay. Yep. Anything that a person should look out for when they're reviewing that?
I mean, some companies have a little bit heavier weighting in the stock market, but it's still restricted to how much they can actually do based upon insurance regulation.
Okay.
So, I think you can look at What are their ratings overall are somewhat helpful. What are their cash reserves are somewhat helpful. What percentages are they, in more volatile or variable investments, which, MassMutual doesn't have a lot of that. So that's also helpful.
Okay. Do you have any other companies that, viewers and listeners could look into if they're researching getting a policy?
The policies that I have are with Penn Mutual. They're with MassMutual, as we mentioned, Guardian, Emeritus, which I'm not a huge fan of, One America. Do we have any others? Those are the main ones at this point. Cashflowbanking.com. They can actually secure an appointment, and those guys can represent a bunch of different companies. They're not beholden just to one company, which is kind of helpful.
Yeah.
Want to master your money? Want to figure out the things that you could do to improve your finances? Click here and check out more videos like this on Money Matters.